Raymond started trading on 1st of October 2019. He chose 31st of March as his accounting date, and his first accounts were for the period from 1st of October 2019 till 31st of March 2020. That is 6 months. Yeah, October, November, December, January, February, March, 6 months. His purchases and sales of plant and machinery during the first two accounting periods are as follows. 1st of October 2019. The first thing I think about 2019 when it's about capital allowances, the first thing I think about 2019 and 20 is that in these 2 years, annual investment allowance was 1 million. So you can spend money up to 1 million on plant and machinery, qualifying plant and machinery, and you can get a tax relief on that 100%. So that's one thing I got. So 1st of October 2019, as soon as he started business, he bought machinery, 130,000. AIA annual investment allowance is applicable there, so he would claim that on that. So it would not go to any of the pools. On 1st October 2019, bought motor van, 16,200. Emissions on motor vans are not relevant. Okay, this is red herring. We don't need this information. Motor cars do not qualify for annual investment allowance, but vans do. So this would also be claimed under annual investment allowance. Number 3, on 12th of November 2019, dates are important. Yes. Bought motor car, emissions 153 grams, 18,800. Okay, two things. First of all, you cannot claim AIA on this. Second is that because the emissions are more than 110 grams, this car would need to have a special pool. So it would go to a special pool, yeah, with less writing down allowances, 6% writing down allowances available on that. Next item is bought office equipment for 4,800. It does qualify for AIA, so we will claim that there as well. Motor car bought on 4th of February 2020. Again, 2020 had 1 million of capital allowances. So same as 2019. Emissions are 102 grams per kilometer, spend 9,200. This cars do not qualify for AIA, but because the emission is less than 110 grams, it would go to our main pool. So we can claim 18% writing down allowance on that. The next item is on 12th of April. So one thing which we need to note down here is that our year end is 31st March 2020. So these transactions are the second accounting period. We are given 2 accounting periods in this question. Next period, 12th of April 2020, he sold the car he bought for 9,600. It was bought for 9,200. Rule on disposal: you would always deduct lower of cost and receipts, sales proceeds. So in this case, the lower is 9,200. So we take away 9,200, not 9,600. Then we have on 12th of April, bought motor car, emissions 110 grams. This is because 110 grams are low. This would be added to our main pool. Okay, it would be 111 grams, then it would go to the special pool. Then on 25th of November, sold machinery, cost 11,500, sold it for 8,800. So we take away 8,800, not 11,500, because that's what our lower amount is. Now, The last item is in 2021. So far we had 19 and 20. AIA limit is 1 million, but in 2021 the AIA limit goes back to 200,000. So bought machinery for 60K, so it should go for AIA. However, another thing we need to remember is about pro rata of allowance for AIA. So the AIA is available 200,000 for 12 months. However, our 2020-21 falls in the first 3 months of 2020-21. I have no idea why Taxman has done that. That makes life so complicated. These allowances should be from 6th of April till 5th of April, which will make more easy. But now these are two different categories now. So what we need to do, we need to calculate how much of 200,000 we can claim in the second tax year, 2020-21, and then we will see if we can claim all of the 60,000 for as an AIA, or we can do less. So that one calculation, which will be required as well. Last line says that there was 25%. There was 25% private use by Raymond. This is allowed in sole traders. It happens quite a lot after motor car purchase in November 2019, but there was no private use of any other assets. So how it works, that we calculate writing down allowances as normal, and before we put it into the final column for the capital allowances, we take away the percentage of the private use, and we only claim the business use one. Prepare a capital allowances computation for the period to 31st March 2020, and what we will be doing, we will have a main pool. Let's use capital main pool, and then we will have motor car. So remember, we have a special rate pool, and then we have separate pools for the assets with private use and assets for short life assets. So in this case, we have a car which could have gone to our special rate pool, but because there is a private use, it would have its own pool. So we have a motor car with the private use. So I'm going to write down in brackets private P. So private use 25%. Yeah. So that's what we have. Okay, let's wrap this here. And then I have the final column, which is our final allowances, which will go to our trading profit, taxable profit computations. So we calculate our trading profits, and then we take away our allowances from there, as just like depreciation we do with depreciation allowances. I'm leaving these columns in the middle for a reason, okay? So we'll see that why. Right. So let's start with the first accounting period. Okay, so the first one was 6 months, 6 months to 31st of March 2020. That is first accounting period. Okay. No balances. So you're starting with 0 balances, and then what we do, the rule is, first of all, you add the additions. Okay. So what are the additions? Now, what we will do is, first of all, we will try to claim AIA on the things. Yeah, if we can claim AIA, then those would not go into addition. There will be a separate working for that. So what we had, if you go back to our question, in the first 6 months, we have 130K is going to go in AIA. We have 16,200 is going to go in AIA, and then we have 18,800. That is the car which is our special rate pool. Yeah. So I can start with that, maybe 18,800, and not special rate pool, sorry, it's going to be our private use pool. And then we have office equipment that is going to go in our AIA. So we, again, even that would not go to our main pool. And the last item is a motor car bought for 9,200. Emissions are less than 110K. So this is the amount which is going to our main pool. This year has ended. Nothing more was bought in this year. So we can actually start calculating our allowances on this. Main pool 18%, special rate pool is 6%. So WDA at 18%. So this times 0.18. However, one more thing, WDA rates are only for 6 months, or their annual rate. So we need to prorata this amount as well. So what we do is we use a bracket and we divide this by 2 to get a pro rata amount for this. We use the same thing for so WDA at 6% now. Again, it is for 6 months. So this amount, let's use a bracket here. This amount times 0.06 and divided by 2, and we get our allowances for this. All of this can go to our final column. However, this amount is for the full usage because there's only 75% usage for business purpose. So that's why I left this column. I'll multiply this with this and I'll get the final figure for allowance. Another thing which needs to be calculated is the balance for these two pools now. So written down value WDV would be 9,200 minus the writing down allowance and 8372, and then this minus 18236. Although, so we have done our main pools and the special pool. Although AIA do not calculate it in main pools or any of the pools, however, we do need to show the workings on our table. So right at the end, after calculating everything, we need to do additions under AIA. Annual, let me write down the whole thing. Annual investment allowance, yeah, AIA. Okay, what do we have here? We have three things: machinery, of 130,000. Then we have motor van. Let's write down van. That is 16,200. And the last thing we have office equipment, which is 4,800. The total is 151,000. All of this will be claimed. Remember, we can claim, I'll show you the working. We can claim because this is 6 months, and for 2019 and 2020, the total allowance is 1 million, and these accounts are only for 6 months. So the maximum we can claim is 500,000, because we clearly know that it is less than that. So we can claim all of this as our AIA 100%. I'll just in brackets, I'll write down our limit is 500,000. So you remember that this is something we need to keep in mind. So that's all, and nothing stays there. And this amount would go to my final column, 151,000. The total of this will be taken down to our income statement for tax purposes, and it will be deducted from our trading profits. And the chances are, to be honest, in the first few years, businesses do not make that much profit. So the chances are it will convert it into a loss, which can be used for future. We are not doing losses in this class, so it's not relevant. But losses are good from tax point of view. Losses are good. Strange thing. This takes us. This brings us to the second year now. Let's call this allowances. Yeah. All right. So the second year, 12 months to year 31st of March 2021. That's second year. Now let's go there. All right. What we need to do, first of all, we need to bring the balance brought down. So writing down values brought down, and what do I have? 8372, and we have 18236 as my opening balance for this. What did we do in year 2 then? We sold the car board. We will deal with the sales later. First, we need to do the additions. Okay. So we'll come back to the car, and then we bought a more car, 110K. It's 110K. So this would go into the main pool. Anything else which can go to the main pool, and that is our bought machinery for 60,000. However, we have some AIA on that. So first of all, we need a separate working here for additions, all right? So additions, first of all. So what we have car, bought motor car, that is 15,500, and the other item is our machinery, which is worth 60,000. Now this is in 2021, and the total annual allowance available is 200,000, but that is for the 12 months. And for 3 months, how much do we have? Okay, so machinery bought, machinery, the value is actually, let's take it to the second column here, because all of this is going there. And I write down 60,000 here. However, AIA, let's calculate how much AIA can be claimed. AIA. And first of all, do the maths, and what we have 200,000 for the whole year. We only have 3 months from the year, so our limit is 50,000. So let's write down limit here. Limit 50,000. Okay. Now I don't need that 50,000 here. What I can do, yeah, I can use that actually, and that 50,000 will be claimed as AIA. So the difference of 10,000 will be added to the pool. Yeah. So this brings us to, there's no other purchasing in this period. So we leave it like this, and we will total our pool with this. Yeah. 33,872. Now we will deal with our disposals. Okay, so what is our first disposal? First of all, we sold the car which we bought for 9,200. We sold it for 9,600. We take away 9,200. Yeah. Second disposal is 8,300. Disposal. Let's give it a heading. Control X. The car. Car. And then we sold our machinery. That was sold for 8,300. So we take the lowest minus, and the total would be taken away. From this amount, 17,500, and we have a balance left of 16,372. We claim the balance, we claim WDA at 18%. Let's just round it up. 2947. And then we do WDA at 6% of this amount, 18,236. And we get 1094. Only 75% is allowed. So the final amount 2947 and 75% time 1094, 821. The balance remains in these two pools is 16,372 minus 2,947, and then previous balance minus new deductions is 17,142. That's sorted for this year. The only thing we need to do is additions, AIA additions. And if you remember, we claimed 50,000 on machinery. So 50,000. So this all can go. There's no working needs doing here because only one figure. So all of this can go to my final column, 50,000. And the total for this year be 50 plus 821 plus 2947. So that's my total allowances. So that is the answer to 11.4.